Welcome back everybody to the Nomad Hedge. In today's video, we will be taking a look at the S&P 500, but right in front of us, we do have the Dow Jones Industrial Average. So we're going to be taking a look at both of them, but we're going to start off by taking a look at the Dow Jones here and what looks like to be the conclusion here of wave 3, 4, and then 5. So we're watching this rising wedge here very, very carefully. And if we take a look at some of the indicators, we can see across the board that we're seeing some sort of a peak here. First of all, we do have the money flow indicator reaching that threshold line of 80 again, and then we're seeing the DI of the ADX. It's actually way above this center line here at 21. So typically when the plus DI reaches that 30, 32 level, that's when we typically start to see some correction in the market. So what we're basically looking for here is the conclusion of wave 5. Now, we've been bullish ever since the April lows here, and we believe that if we're going to get a correction here of say 5 or 10%, this is going to offer a new buying opportunity. We do not believe, or we do not call for, a break of the April lows. Now, if we switch over to a weekly chart, we can see right here where we currently are in this market. And if we were to get a 5 to 10% correction, that would possibly just bring us back here towards this former wave 1 primary, and we could likely retest this level before setting the stage then for another wave 1 and 2, and then we would start a new minor degree. So that's going to provide a new buying opportunity. However, we need to be a little bit cautious here. Why? Because if we zoom in here, we can see we had a huge drawdown right here, and we could make the case that we had a 1, 2, 3, 4, 5 right there. So we could already have started a new 1, 2 minor degree right there, right? So we're either going to call this the wave 5, or this one was already completed. So if we're going to get a correction, we don't typically want to break below this former high here. Now, if we do, we're looking for a larger correction than 5 to 10%. And if we would take the measuring here, this is your 4 or 5% level, and then 10% would bring us down towards around, we're looking then at the 55 EMA on a weekly chart. So either, again, 1, 2, or we could see another subwave within this 1, 2, and we are looking for a minute degree correction, and then that would precede us towards wave 3. So that's how we view the market here by taking a look at the Dow Jones Industrial Average. And so if we go back to the daily chart here and switch over to the SPY, so the SPY right here is looking almost similar here to the Dow Jones, although this one is a little bit more clear. So again, if we zoom in, we can see here that the wave 3 and wave 4 here of the minute degree is basically taking us right now towards this wave 5. Okay, so we have a potential 1, 2, 3, 4, 5 right there. And that could conclude wave 3 of this degree, right? So that would then take us to correct, and we could start a wave 4, and that would take us and push us higher here to this last wave of wave 5 of this minute degree. So this is how we view the market here when we take a look at the S&P 500, the SPY, and the Dow Jones Industrial Average. Now, the Dow Jones is a little bit clear in a way that it gives us a hint that we could have already started a new wave right there, right? So if we go back here to the Dow Jones, we can see this 3, 4 here could have already set the stage here for 1, 2. But when we take a look at the SPY, this correction here that would warrant a 1, 2 looks a little bit too small. So nothing is wrong here. We can make the case that this is actually a wave 1, 2. But, we always have to wait for the market to tell us if this actually is the conclusion of wave 5 or not. And we're already starting to see signs of it. And what I mean by that is if we take a look at the RSI, for instance, we can already see that we do have a negative divergence. That's typically what you also see when we are within this wave 3 and then pushing towards wave 5. You do want to have that negative divergence proceeding towards that wave 5, and that sort of like confirms it as well. So we're still in this wait and see mode. We're not pushing towards new buys at this moment. We do want to remain a little bit cautious here. We have a government shutdown, and we do have some economic data that hasn't been released because of that. We're just waiting for some sort of a catalyst, right? If it's going to be good news or if it's going to be bad news. If it's bad news, we could see that trigger or catalyst to come into this market, and that could force some sellers back into, take us to lower levels here for the S&P 500. Now, again, we are not calling for new lows. When we zoom out here, we're still very, very bullish. We believe that if we're going to get a 5 to 10% correction, it's going to be a buy in our opinion. And so you want to take a look at that and prepare yourself. So again, here's the S&P or the SPY here. You get wave 1 primary. So a retest here would bring us to a 10% correction. If we're going to retest this level, and that could push the 55 EMA a little bit higher as the days goes by, so that could be a retest of that level as well, which would coincide with the 55 and the wave 1 primary, and that should be a buying opportunity in our opinion. So we're watching the market closely here, and we'll keep you guys updated. If you haven't already, you can follow me on X. My handle is @NomadHedge, and I'm basically on most of the social media, and I'll keep you guys updated with insights and the wave counts as we are proceeding and progressing towards this last wave. So I'll see you guys in the next video. Take care for now.